Let's welcome on board Romesh Sobti, the MD and CEO at Indusind Bank. Mr. Sobti, pleasure speaking with you. Morning, and apologies for that slight bit of delay.
Good morning.
Okay, let's begin talking about your numbers and wanted to really get a growth outlook from you. Given the 4.5% GDP print and the system-wide credit growth coming down to 8 to 10%, where actually do you expect growth to come in for you, especially in the non-MFI parts of your loan book?
So, our loan book is pretty well dispersed. Whether it's the corporate book or the retail book is pretty well dispersed. So the retail, for instance, has of course the vehicle finance. Bulk of half of that is actually vehicle finance. Within vehicles there are these 8 or 9 products, and barring I think commercial vehicles, almost every other product line is actually showing a growth, at least in our books, partly maybe because of movement of market shares. The non-vehicle retail is chugging along nicely at a pretty decent rate, but not the rates of 30% and all that used to be in the past. So on the corporate side, of course, we are seeing a slowdown, because apart from the fact that the demand pull on credit is low, there's also deleveraging going on. And I think if you see the system credit, that's depressed by the fact that there are very large scale recoveries which have also happened there. So I think back to the main question on where will the growth really come from, I think a dispersed portfolio, even at lower levels of activity, will probably give a bank our size the continued momentum on the loan growth. And for us to sort of grow in the 20s, for instance, is not such a big stretch, especially if we are in a position to take market share as well. But overall, I think the operating environment is pretty tough and getting tougher. There is some anecdotal sort of evidence that people talk of green shoots and things like that. For instance, we did hear one large truck manufacturer saying that inquiries for new trucks have improved. But I think these are very, very sporadic, and there is no consistent trend so far.
Right. Also wanted to understand, Mr. Sobti, that, you've provided for credit cost guidance of about 60 to 70 basis points for FY21. Wanted to understand what exactly gives you the confidence to achieve these numbers, because for 9-month FY20, you've already done about 60 bips. So annualized, that's about 90 bips for this year. Just wondering where this confidence is coming from, that these numbers will remain intact at 60 to 70 bips.
I think very clearly whatever you see in terms of gross and net slippages is coming out of the sub-investment grade book. And you will see that the sub-investment grade book has shrunk pretty smartly over the last, say, 12 months. It's come down by almost 3%. So I think that confidence that we should be in that range of whatever that 70 odd basis points, or maybe 75 basis points, is really coming out that the stress part of the book is actually playing out. And over these 2 quarters, last 2 quarters, quarter 2, quarter 3, we have let it play out, because I think we've had solid absorption capacity because of a very sound sort of operating profit growth at 3.83% of assets, I think, is amongst the highest in the industry. So we are letting that sort of play out, and we are doing it proactively. So I think that is that gives us this comfort that what do you call it, sub-investment grade book, which really contributes to slippages, etc., is actually playing out.
Okay. Mr. Sobti, the capital consumption at the current rate of growth and consumption, when do you expect to raise capital again? Would it be in FY21 or FY22?
So, if you include the profit for the 9 months, we came up at a capital adequacy of 15.43. And if you will recall that when we did the merger with Bharat, the promoters who are diluted have also committed through a preference share issuance capital to come in. So that capital, the warrants have to come in. So the next 12 months, even that will come in. So actually, if you look on a standalone basis, our CRAR is probably in the 16.5%. And if we assume that we consume about, say, 130 or 40 basis points of capital every year to give our growth of 20-25%, then I think all things going well, the need for capital may not arise over the next 18 to 24 months.
Okay, now with respect to Hindujas, tell us how much of the funds are still going to come in from their warrant conversion, and in light of that, what will this take your Tier 1 capital to?
Another 2,000 crores has to come in. I think 700 crores came in front, so another 2,000 crores come in. And our total capital adequacy, as I said, should be 16.5%. And our Tier 1 should be in that vicinity of, actually most of our capital is Tier 1. I mean, we don't have, most of our capital is actually pure equity. So we should be in that same vicinity of around 14.5%, maybe 15% on Tier 1.
Wanted to understand about the management changes as well, Mr. Sobti. I know it's in the RBI's purview and, you know, not in your control, but what changes have happened internally on a day-to-day perspective?
I think day-to-day it's business as usual. You know, Indusind Bank has had this, I think, very satisfying track record that not a single person, single member of the top management team left in the last 12 years. And I have the confidence in these individuals that they are as engaged with the bank as they were when we started this journey about 12 years ago. I think there is a great deal of stability there. Also, I think it's worth mentioning here that when 12 years ago, you know, when we started the journey, people talked about these 5 gentlemen who came from a multinational bank and sort of scripted the turnaround story. I think it was never those 5. It was much more than those 5. And as we speak, you know, we are gathering together next week, for instance, to work on our next 3-year plan. We work on the basis of planning cycles. So next 3-year plan, and we are calling 81 people to work out that plan. So, you know, that's the sort of bench strength that has been created. So I think I'm not sanguine, but I'm pretty confident that we will have a continuity of thought and action.
Do you see people at Indusind actually feeling comfortable about the changeover internally?
So, you know, I think the comfort is right from the fact that the management team is intact. And I think the fact that this entire group, the larger senior management group has grown. Growth is the real, you know, growth causes the stickiness. And I think over these 12 years and hopefully over the next decade as well, Indusind will continue providing this glue to its working staff and its management. That growth will always remain. So I think there is comfort. I don't see any form of sort of turbulence in any part of the bank. It's business as usual.
Turbulence makes me come back to slippages, Mr. Sobti, because, you know, while they came from known accounts that you had previously mentioned and, you know, taken accelerated depreciation when you can, I guess is a good thing. Just wondering, why then is the market so unhappy? What are your thoughts on the same? What is the message that you'd like to give out to your shareholders, say yesterday when your stock tanked the way it did?
No, I think people tend to jump to the 6th line on the P&L and they forget the 5 lines which are above that. So I think a reminder on that score that the basic businesses of the bank are extremely sound. In the circumstances, I think we have come up with a more than decent set of numbers. So if you see the growth in our, the interest engine is humming beautifully and revving up, 34% growth. The margins are improving. Fee businesses are going apace. And we have probably amongst the highest operating profit to assets ratio in the industry today. And that gives us the, as I said, the absorption capacity. As far as slippages are concerned, as I talked about, people have to say that these are the same accounts which they have identified in that sub-investment grade. And if you also see how it's playing out, Q4 of last year, we were the first time we declared, some percentage on our stress book, especially those 3 or 4 names and groups at 1.9%. This quarter that has come down to 0.4%. So while the slippages are playing out, this stress book is also sort of going down. So this is both are, they go hand in hand. And our ability to absorb that and proactively take accelerated provisioning. Over the last 2 quarters, we have taken accelerated provisioning of well over 600 crores. So I think people have to remember that the book is playing out, the stress book, which is identified and is playing out. All of this is really coming out from that sub-investment grade. It's not that fresh additions are coming to the sub-investment grade. And we are proactively sort of handling them, and wherever needed, making more provisions than are necessary. Yet we have a sort of handsome bottom line.
Sobti, I know the answer, but as a journalist, it's my duty to clear the air before it becomes speculative and before people start talking about it. At the Indian Economic Forum, I happened to ask SBI chairman that would you be looking at acquiring Yes Bank, and he said a big no. He was very loud in the word no. However, he said that look, SBI is not buying Yes Bank, you must check with Kotak and Indusind Bank. I know there is no speculation in the market, but why don't you once and for all say a loud no for Yes Bank?
That's
if it's a no.
Well, as loud as it can get on the camera, I can say no.
You can say it louder, sir.
I can say no, no, no.
Really appreciate your time, Mr. Sobti. Thank you for joining us. And a couple of times we've interacted in the past. We've just managed to decode this entire vision statement of Indusind Bank so wonderfully well for our viewers and for your shareholders that even markets have rewarded the stock after those interactions. Really appreciate your time and good luck for the 20s, sir.
Thank you.